Good morning. This is George Tkaczuk with Know Your Options Inc. reporting to you from the CME Group trading floor in Chicago. Bond markets are closed here in Chicago today in observance of Veterans Day. And I'd like to take this opportunity to salute all the veterans who served and thank you. This morning I want to talk about a few things. Go over the current condition of the equity market, and then we'll talk about certain sectors that may do well after this election, and we'll take it from there. Okay, first off, the equity market is still in the correction. Last time we were here, we talked about October 26th being the bottoming day for the Nasdaq and the S&P, and it looked like we were going to have a rally attempt. However, that all got negated as post-election results caused the market to take a deep dive, and now we hit a new low last Friday. So last Friday, the Nasdaq way undercut its 200-day moving average, so that'd be our new low. On the S&P 500, it's the same thing. The S&P just at around its 200-day moving average. Last Friday again was a new low. So before we have any kind of meaningful bounce or rally attempt, we'll start counting from day one of last Friday. Now, taking a look at the Nasdaq, it's reasonable we're going to get a bounce around here. The market's been pretty oversold. However, I would not consider this any meaningful bounce until we see the so-called follow-through data we've often talked about. It's very likely the Nasdaq will bounce from here, but also be aware we might still go down to 2850, 2800. Same thing in the S&P 500. Unless we see some big volume coming in off this bounce, off this 200-day line, once it goes up against the 1400, which was previously support, which is now resistance, you might want to try to sell into that rally if we don't see any significant volume. And we might see more downside, and more downside in the S&P will take us to 1350, 1330. Now, of course, this all depends on what happens this week. This week, President Obama is meeting with congressional Republicans to try to hammer out the deal on the fiscal cliff. So just continue to watching the market, the price and volume action. I'll tell you which way the market's going to go. Now, let's take a look at some of the sectors that may do well with the re-election of President Obama. It's viewed as hospitals could do very well with the idea that under Obamacare, there'll be more patients and there'll be guaranteed reimbursements from the government. So you see stocks like Tenet Healthcare, symbol THC, or HCA Holdings, symbol HCA, might do well. The stocks are holding up in this environment, and of course, if Obamacare goes into full-blown mode, then these stocks may continue to do well. The gold and mining stocks also may continue to do well with the idea that we're going to get more of the same, more printing, more borrowing, which would be bad for the US dollar, good for gold. You can take a look at GLD and some of the gold miners. Stocks like Silver Wheaton, SLW, or Allied Nevada, ANV. Those are our First Majestic Silver, symbol AG. Those are some stocks that may also do very well in this environment. And also another funny little bounce we saw in gun makers. You can make what you want off of this, but after the election results, Storm Ruger, symbol RGR, and Smith & Wesson, HWHC, both had a pretty nice bounce after the election results. Now, we also want to take a look at, the market will eventually bottom and will turn. So we want to take a look at which sectors and industry groups are still holding up in this environment. Now, even the market was in a correction part of the election, got hit further, and there's been a number of sectors that continue to do well. And basically the theme still seems to be in the home builder sector. Stocks like Lanier, D.R. Horton, Ryland, Pulte Homes continue to do well. Materials, again related to building, stocks like Eagle Materials continue to do well. Also, we see some of the mobile home companies like Tor Industry and Patrick Industries also doing very well in this environment. Now, you shouldn't be buying these at this moment, but these are, again, sectors that are performing well at this time. You also have the machinery sector, stocks in the 3D printing space, stocks like 3D Printing and Stratasys continue to hold up in this environment. So these are the kind of things you want to be doing while the market's in correction. Don't be buying anything until we see a follow-through day. Any bounce we see is probably going to be a little bit of a suspect bounce. So that's something you might want to short into, unless we see some big volume rallies, and that may tell you that maybe the tide indeed has turned. Thank you. This is George Tkaczuk with Know Your Options Inc., coming to you from the CME Group trading floor in Chicago, and let price and volume be your guide.